Hello YouTube, Louis here, and I would like to dive into India's use of gold and talk about what happens when government spending is out of control and the governments get just a little bit mean about the whole subject of gold. Of course, India is one of the largest markets for gold, and the growing affluence is driving growth and demand. Gold has a central role in the country's culture. It's considered a store of value, a symbol of wealth, and a status and a fundamental part of many rituals. So why is it that the Indian government is cracking down on the citizens' ability to keep money outside of their fiat monetary system? Well, let's put this story together and then we'll see what that is. But, you know, of all of the countries in the world and all of the cultures in the world, you might say that India are the original stackers. Right? So let's dive into this and see what's been going on there and why it is so much harder to own gold in India than it used to be. Then, for argument's sake, let's go ahead and display the price of gold in the rupee. I believe that's how that's pronounced. And of course, there has been a turn down in gold. All right, so we hit a major high around 1550 US and about 112,000 in the rupee. It is about 108,000 as we speak, but this is a minor pullback, I believe, at this point in time. We just need to let this market mature. But let's go ahead and see how it has done over the last year. Okay, well, this looks very similar to other countries' charts. So we have, even as of today, at 108,000, just, what is that, May, June, July, August, 4 months ago, it was trading at 90,000, and now about 108,000, so that's easily 20-25%. While we're here, we could take a look at silver, but I'm not going to talk about silver at the moment, but let's go ahead and do a one-year chart of silver in the rupee, and there we go. So significant breakout in silver from 1100 to 1400. That seems to be about the same percentage. But let's go on and find out why we've had the appreciation to begin with. Of course, the Indian culture loves gold. And but I imagine the currency, as in many countries, is the reason that it is gold is jumping up so high. Let's take a look at the India rupee to the dollar currency exchange rate. All right, here is the exchange rate, and as you may have surmised, the rupee has been falling compared to the dollar, and in 2011 it was sitting at let's see, 0.022. And as of today, it is somewhere around 0.014. All right, so 22 to 14. Well, that is that sounds like about a 30-35% decrease in the value, the comparative value of the rupee to the dollar over the last 8 years. So gold actually probably should be doing a little better because we've only seen, well, let's go back 8 years. Let's go back 10 years and see how we've done. Yeah, I would say that gold has a fair move ahead of it in India because it has only gone from you know, a high of 95 up to 110,000, 95,000 to 110,000, whereas the currency has devalued much more significantly than that, and gold is definitely higher than it was. As we can see, the 10-year chart of the gold in the rupee, around the time that we were 1900 in the U.S., it was about 90 to 95,000. And currently it is trading at 110,000, even though gold is only at 1,500 or less. So this difference here is the currency devaluation. But if the currency is devalued 30%, from the point that silver was 1900, you would expect 30% on top of 24. That would be 90. Let's call that 95,000. 30% on top of 95,000 would be another 30. That would be about 120,000 rupee. So I think there would be room for it to run based on the currency devaluation. Now keep in mind, this is the long-term chart of what that currency has been doing. It's been dropping consistently over time, so definitely there is a problem with Indian currency. So what have the people done, and what has the government done? Here we go. Okay, here is the first thing. Well, they've done this many times, I believe. Taxation. All right, what's a good way to discourage people from collecting precious metals and being outside of the monetary system, outside of the taxable system, more importantly? India had a huge cash-based business, probably because people are poor and they don't want to pay tax. So what does the government do to discourage them from owning precious metals? Well, they tax the heck out of it. So this article is July 2019. India gold tax hikes add unexpected headwind to the price rally. You saw that it has been rallying, right? Because the currency has been falling. Well, gold's recent rally to a 6-year high is suddenly looking a little more fragile after India, the world's number 2 buyer, unexpectedly hiked import duties. The increase in the duty to 12.5% from 10% on July 5th caught gold traders and jewelry manufacturers off guard, as some have been expecting the government to lower the tax instead. The Indian government wants to reduce its fiscal deficit as well as the trade deficit, and since gold is the second biggest import by value behind crude oil and fuels, it is an obvious target for increased taxation. While the boosting the cost of gold to domestic consumers will lead to an increase in the smuggling of the precious metal, it is also likely that demand growth will take a hit. I'm going to stop right there for a minute, but of course they have consistently been trying to thwart the natural use and collection of gold in India, and so this is one of the ways they've done it. In America, gold has recently become taxable, more completely taxable in many areas, many states that want to tax it, and they're closing the loop on people who do not charge sales tax. Our tax is, of course, nothing. What is the other thing the government has done to sting the gold stackers? Well, 2 years ago, the Indian government abruptly wiped out most of the nation's currency in hopes of ending black money and curbing corruption. Now, that may be what the government said that they were doing when they eliminated the 1,000 rupee and the 500 rupee notes. And as I recall this story, the poor citizens were given a very small amount of time to turn in their 1,000 and I guess the 500 rupee notes. The thought was that these large notes were allowing the citizens to trade, basically in cash and avoid paying tax. Okay, so the government thought, in my opinion, the government thought that by eliminating these notes, they could diminish cash transactions and push people into, plastic transactions, things that could be tracked and taxed by the government. The way they did it was just horrific in that they gave the citizens a very limited amount of time to turn in their notes. However, when they went to the banks, unless they were in the know, which I imagine information does not travel really freely in India, but if they were not in the know and they delayed at all, they found themselves standing in long lines at the bank to try to convert their notes into smaller notes. But the bank ran out of the smaller notes and closed their doors. And there was an expiration date on this money. And what wound up happening is a lot of people wound up brokering their money through some kind of shady black market wholesale trading operation. And this article goes on to say how that happened, that was true, and that most of the money wound up back in the banks. The government did not. These bills, for the most part, continued to exist, but a lot of people took a haircut on their money because they couldn't get to a bank. They had to get to somebody who would broker and take pennies on the dollar to turn these bills in. So, long story short, though, the government, by messing with the money, with the fiat currency, pushed people into credit transactions, credit card, debit card transactions, which can be tracked by the government and taxed by the government. So that was thing number 2 that they did, is to basically push people back into digital currency and away from black market transactions. Of course, at the same time, they were discouraging gold purchasing. And I imagine some of, this fiat, these large bills, could have easily been used to trade gold. As much as they treasure gold, I'm sure this diminished the black market gold purchases. At least that's what I would think. All right, just quickly, and did this work? Let's see. In the next financial year after the change, both the number of taxpayers and direct tax collections grew significantly by 10% for the number of taxpayers and 19% for the dollar value of the transactions. So putting people into the digital currency increased the government's take by about 19%, excluding growth in the economy, which actually shrank when they started messing with the cash. All right, so what are the ramifications of such an assault on gold in India? Well, it continues to play out, but there could be a silver lining. The Indian investor, the major wild card in the silver market. There is a sleeping tiger in the silver market, and it isn't the Chinese. While the Chinese continue to acquire a lot of gold, they aren't that interested in silver. However, it's the Indian investor who has been the dominant player in the silver market. Why? According to the article published last year on livemint.com, silver is so ingrained in the Indian tradition that the country's currency, the rupee, is named after rup, the Sanskrit word for silver. All right, and now in this article, we see what has happened to silver imports since 2016 as a percentage of the total world's mine supply. India silver imports have gone from 13% to 20% to 32% in 2018. That is an estimate. I don't know the 2019 numbers, but perhaps Indians are turning to silver, which I believe is only taxed at around 1%. So I think this article indicates that India is the wild card in silver purchases, but it's no surprise that with the clampdown on gold and the increasing taxes on the import of gold, that silver would look more appealing. Of course, it would be hard to wear 1,000 ounces of silver to your wedding. Oh gosh, so what a challenge. And of course, India has been raising those taxes on gold for some time now. Here's a little clip of the last time they did it.
I may add that we may be left with no choice but to make it a little more expensive to import gold.
He then raised the import tax on gold for the 3rd time in a year, this time hiking it from 4 to 6%.
And as we saw at the beginning of this video, the last increase was to 12.5%. Of course, they will always need more revenue, and it is no surprise that they are looking to obtain that revenue from the the last bastion of stability, the gold market. Clearly, the rupee is devaluing and will continue to devalue. All those weddings with all that gold in the past has actually been a lifesaver to so many Indian families. And although wealth is actually somewhat ridiculed in India because so many are poor, if you are hoarding cash, for example, you're made an example of. But the one place that you still are able to possess tangible wealth is in your wedding dowry, and gold continues to be the stable asset in this country, which is somewhat rich in gold. Of course, they are not rich in paper currency or digital fiat, but with the government on an all-out assault against paper money coming to a country near you soon, and heavily taxing the gold imports, now at 12.5%. Why couldn't that be 25% tomorrow, or 50% a couple years from now? Smart people are continuing to collect precious metals. Perhaps silver may come into its own right in India as well, with the pressures on gold right now. But taxation, that is the way governments can discourage stacking. Okay, and the moral of the story is get your stack together now, guys. Don't wait for it. Don't be worried about a 50% or $50 or $100 pullback in gold. Currencies are declining, and tangible assets are increasing in importance. All right, that's all I have. Please let me know your thoughts on this story. Look forward to hearing them. Louis out.